Hey folks, welcome back to the channel. Today we're talking about high interest, low interest, lesser interest savings accounts and what's going on with the recent drops in all the interest rates. If you're new around here, be sure to get subscribed, like the video, join the community Discord, trying to build up a community, people talking about personal finance, all that good stuff, but let's jump into it. So today I got an email from Ally Bank telling me that due to the ongoing interest rate decreases, the pandemic, they've decided to decrease the interest rate on their high interest savings account from 0.8% to 0.6%, a whopping 25% decrease. As a fan of free money myself, I was personally not too thrilled about the news, but it wasn't really unexpected. We've known for a long time now that interest rates have been cut for a while now, and it seems like the Fed wants to keep them low for the time being. Other high yield savings accounts across the board have seen drastic decreases compared to where we were just 1 year ago. Now, even though this 25% decrease feels bad, it hurts. If you don't know already, high interest or high yield savings accounts are one of the best places to put your money if you need a place to stash your emergency savings accounts or just to have a general savings account. The rates that they're offering is still way higher than the national average, sitting anywhere from 0.05% to 0.1%. A lot of the major banks that you'll hear out there, Wells Fargo, Chase, Bank of America, will have these very low rates. And even the once high Redneck Bank we covered a couple months ago has dropped their interest down to 1%. The T-Mobile money account still flying high, 4% on your first $3,000. You do have to deposit $200 every single month into that account. And the Redneck Bank as well has some other conditions that you have to meet. If you're interested on a more deep dive going into high interest savings accounts, be sure to check out my video. I'll put that up somewhere over here for you to take a look once we're done here with this video. So you're probably thinking, why are the rates dropping again? I thought maybe you signed up for Ally Bank last year, 2% rate or even higher, and it's just been going lower and lower and lower since. If you haven't checked in a while, you might be pretty surprised at what you're earning now compared to what you were. So why are they dropping? And do I have any alternatives as a customer or any other ways that I can get some extra interest on my savings? Not trying to go into full investment and brokerage accounts, want to keep it safe, just want that interest. So the answer to that first question, why are the rates decreasing, is a little bit complicated, but generally speaking, the Federal Reserve in the United States sets their interest rate or target, and banks will follow and kind of adopt those rates as it spreads throughout the system. And we're seeing here now that the impact of low interest rates, just from what we're looking at, there's always pros and cons to any economic decision. But in the case of low interest rates, the pros are if you're in the housing market looking to buy a house or looking to finance something, you know that the interest rates are dirt cheap right now. They are incredibly low, so a lot of people are trying to refinance their mortgages or to buy new properties, or even if you're making a big purchase such as a car or have any other loans, even student loans as well, low interest rate. The same interest rate, right? They're generally low across the board, so it's good for when you want to spend money, when you want to go finance something, which is why they're trying to stimulate the economy to encourage people to spend money and to invest rather than just holding the money on and not putting it back into the economy. So on the other side, if we're taking the perspective of a potential bank account opener or somebody with a high yield savings accounts, the con is that our interest rates have decreased on our savings accounts. Across the board, they've gone down for the most part. So here, there's less of an incentive to save as well. Going with the cons, they want us to go out there, buy another house, go out, spend our money to try to get the economy up and running again. But if we want to save, it might not be the best time in terms of those bank accounts. A lot of banks will use higher interest rates on savings accounts or intro sign-up bonuses to try to encourage customers and to lure them into opening accounts with them, having deposits, savings, or checkings accounts. And then from there, they might try to get you to open up another credit card. They might get you to put in a loan application for a house or a car, borrow some money from them, a business account, student loans, whatever it may be, all different sources of revenue for these banks. But since the pandemic and since the economic uncertainty has grown, we're seeing people generally saving more money than they were before. So now banks may have less of an incentive to try to convince you to save your money with them because they already have a huge influx of savings just coming from this year. And you might say, well, there are millions of people unemployed, millions of people living paycheck to paycheck. They're not really saving. But then again, when we think about the people who are saving at the end of the day, it's those who can afford to save. So maybe middle to upper class, more stable jobs. They're not working paycheck to paycheck. Their jobs have relatively been unaffected here. And they may be more concerned about the economic situation, saving up some more than they would have normally. They might normally be spending more, consuming more, but now they want to save. But for somebody who's living paycheck to paycheck, for those 4 out of 10 Americans who, if hit with a $400 bill out of the blue, will not be able to pay for it out of their savings, then they're not really saving anyways. And especially now, they really don't have the luxury to save. Maybe their job was cut due to the pandemic restrictions and the economic slowdown. So what money they do have, they have to use it to house and feed themselves. So there's not really a bunch of extra money floating around there to put into a savings account to save up. Now, if you can, definitely would encourage you to start building up an emergency fund, a savings account, if you don't have one already. Even though the interest rates are pretty low on these high yield savings accounts, it's still better than nothing. And that's a place where your money's going to be safe for the most part. If you have your money in stocks or an index fund, in the short term, if you need that money, it might be a little bit more uncertain. But here in a bank account, you know at least you're not going to lose any money as long as you're avoiding any fees that come with those accounts. So interest rates are low, but what can we do about it? Are there any alternatives, people ask? Are there any other ways I can get some more money? So there are a couple other accounts out there other than Ally that just have a little bit more, 0.8%, 1%. T-Mobile, I don't really count that. It's only $3,000. So depending on how much money you have, it may make sense to move it over. But just know that the interest rates will constantly change. So it might be this one day, they might raise it the next day, they might lower it again. And generally speaking, no bank is going to unilaterally raise their interest rates by a whole bunch or cut them by a whole bunch without reason. They understand they're still running a business. They need to keep their customers, retain and grow. If I was opening a bank and I was offering 10% on my savings account, I get 5 million people to sign up for it right away. Best deal out there, no hidden fees, no strings attached. So I get my user base, I get people to deposit money, and a couple months later, I'm like, well, I got your business, so now I can't afford to pay that 10% obviously for the long term. I'm cutting that down to 1%. Well, guess what's going to happen? Everyone's going to leave. I'm not going to have any customers left. People are going to be mad. They're going to be pissed. And that money is just going to be gone. People are just going to close their accounts. It's not like a credit card where you have like a credit check associated with it. Bank accounts, more liquid. You can close and open as you may. So some may have a little bit higher rates than others for that small competitive advantage, but you generally won't see anything that's too crazy or too far out there. So if you like your bank, you're having a good experience, the rates aren't too low, you don't have an account paying you 0.1%, or you could be getting 0.6 to 0.8 easily, there's no rush or panic to move your accounts around. I do want to touch on people with their money in an account with a more traditional bank giving you those pretty low rates. There are advantages to banks having that in-person service or having branches or locations you can go to. They can often have a lot more services and features available to you as opposed to an online-only bank who generally offer those higher rates but may not have a physical branch, may not have a person you can go walk in and talk to. So the convenience and those things are a factor. But if you're not using that money, if you're not really complicated, you don't really need to work with anybody, everything else the same, right? The fees, the requirements, all of that held the same. I would rather have my money in an account that's giving me a higher interest rate than one that's giving me a lower interest rate. For me, that's just free money. I'll take the slight inconvenience of not having a physical branch, but once again, that will vary from person to person and what your needs are. And you may have a relationship with your bank where you get extra credit card rewards, or you get an extra bonus on your savings interest because you have certain accounts with them or a relationship. So also don't forget to take those into account as well. But outside of those reasons, I wouldn't necessarily just switch over if you can get a 0.1 or 0.2 better rate. It will depend on your situation. So I would say, it's not too big of a deal because rates are being lowered across the board. But what else can you do? Since these accounts have interest rates that fluctuate and change from time to time, is there anything I can do that locks me into a rate for the long term? Well, you can look into CDs, certificates of deposits, or other accounts that offer a more fixed rate. But know that with CDs, your money may not be as liquid. You might not be able to take that money out as easily as you would with just a normal savings account. With CDs, they're usually at a fixed interest rate, but you have to keep your money in there for a specified amount of time. The longer you have your money in, the higher the earnings. So at the end of the day, there's not much that we can do. The market is the way it is. Interest rates are where they are. If we're looking to purchase a home or we're able to refinance, great time to take advantage of it. But for savings, it's not the same story here. If you have your money in a savings account, I would suggest you keep it there. Don't try to move it into like a brokerage and put it into the market, thinking that you can get a better return on your money. And it's just a lesson for us the next time interest rates go back up and they're at 2.5%. Just know that these things will vary and fluctuate from time to time. So don't necessarily sign up for something just because it looks good, because those rates will change. There will be other options to you that are in the same ballpark. Look at the other things: the customer service, the platform, the experience, the fees that might be associated, minimum deposit requirement, account fees, things like that could really make a difference. Because if you have one account that you're paying $20 a month in fees with, you don't have that much money in there, you're most likely not earning that much money in interest. You're just paying it all back in fees. So keep that in mind. Be sure to stay subscribed to the channel to get updates, follow up on what's happening in the markets, what's happening with those interest rates. Undoubtedly, they will keep on changing in the next couple months, next couple years. So you don't want to miss out on any videos. Stay subscribed to the channel. And if you liked this video and thought it was helpful, be sure to hit that like button. Would really appreciate your support. Comment down below if you have any thoughts on accounts that you've seen, what your predictions are for interest rates moving on in the future, if these things matter to you, or if you're like me, 0.1% chance, I'd rather just have the convenience and keep my money in that account. That's all I have for today. Thanks so much for watching. Peace.